Investors and traders, welcome to the channel Market Chart Pattern. Today is 19th of August 2025. Hope everyone is having a fantastic day. So we'll take a look at the key US technology stocks, but I will also cover some of the indices as well. So we are taking a look at the NASDAQ 100 cash. This is the NDX. This is not the futures chart. And here we have seen this market actually hit exact number of 1.27 to expansion, and it's just closing lower ever since 13th of August, and it's really at a really key level, which is this 20-day moving average right here. This is the one which has actually held it once we had this move lower right here, and it was held, and then we had a nice rally getting exactly to this level. And if we get a close below this, I think that would indicate that this market wants to test this region of 22,650, and this is a really important one because we had a important cycle that which had come in here per our timing date around this time period. Surprisingly, it was actually tourniqueted, which was a bit surprising for me, but price action rules. And now if we get below this level, then I believe we could be looking at something where we can see further pullback happen. And of course, there's a lot of structural support around the 22,000 level, and then we have the 20-day moving average below that. So one thing at a time, really watching this very carefully, but there has been a risk of event because, for example, if we take a look at Ethereum, Ethereum is down roughly about nearly 4% today. It went into the 1.27 to expansion, but where it is right now, it's getting very close to some good support between the 4100 to 3900 level, where we have the symmetry as well. So there we go. So getting below this, I think, opens up 3500 level, which is the 38.2% retracement of this entire move higher since the lows in April of this year. And if we take a look at the Bitcoin, there we go. So in Bitcoin, Bitcoin is looking actually a little bit more bearish. So one of the things about the Bitcoin is that it hit our target of 125,000. Didn't exactly hit it, but came close by being about 124,500 roughly. It is down about 8.5%. But it is closing below. Bitcoin still about 25 minutes of trading to go. But it looks like it wants to close below the 78.6% retracement. So this opens up 110,000 if that were to happen, and getting below this, I think 105,000, which will be 38.2% of this entire rally from the lows in April. So that will be the key levels to watch, but it looks like we are entering some sort of a risk off event, and this is exactly where the patterns have actually been coming in as well. And if we were to take a look at the futures chart NQ, so the futures have actually opened. This looks like it's closed below the 20-day moving average, so I think we are in for some rocky times. Per the futures, also the futures, the expansion is done. You can see that this is the entire expansion around the 24,000 level. And if we were to take a look at this on the weekly chart, I'll also show the NDX weekly chart. Last week's lows have been taken out, but of course the week is not over. Let me actually switch it to the candlesticks, a little bit easier to see. Right to our pattern formation, this ABCD completed. It's been completed for since July actually. So it's been some time, and the market has just really not gone anywhere, just going sideways. And if we were to take a look at this on the NDX, This is the zone we had been watching for quite some time, and the market had been in this zone for about a month now, and it's just finding resistance from here. And on the Substack, you'll actually be able to get the charts for this. I'll put the link also for the post that I did last Sunday, in which we discussed all these key patterns and for the stock indices and some of the other key markets that we follow as well. A really quick one for the SPX, which is the S&P 500 cash. There we go. 6,500. It missed it by about 20 points. The 6,500 that we had been watching for. And then thus far it's just been an inside week. Of course, the week is not over. Okay, so let's actually start by taking a look at our tech stock. So let's start by taking a look at AMD. So the AMD stock, we were getting bullish around here, but we were cautiously bullish. We were watching for several of these market symmetry concepts right here. And once we broke this big one, that was the sign that this market is actually ready to move higher, and it did. And one of the interesting things is that this rally here has gone up a little bit. Let me make it, 143% is actually very similar to the rally which took place right here, and then we saw a big correction. So if we take a look at this on the daily chart, here we go. I think this market is entering correction. The 38.2% retracement is around 146, 145 level, so this market could get there because it broke this symmetry. You can see this was the bullish symmetry right here. Today it broke below that, so I think the chances are opening for a pullback further right into 145, 146 level. This is gonna be the key level to watch. So right around here is where we had several of these patterns completing, and then we were looking for we're getting bullish, but we were also finding for a lower risk entry, so some sort of a pullback where you can get in and stuff like that, and the market is likely to provide another opportunity like the way it did right here. Personally, it's just I did have a position, still have a position in this from right around here level, because the risk was quite nice. You can manage that. It's not a financial advice, so you have to do your own work. And I just wrote it through, and then I'm going to get out around this level. I still have maybe 10-15% position still left. Again, it's just not a financial advice. Now let's take a look at the NVDA. I believe the NVIDIA's earnings will come out next week, and this is when the 7th of April was happening, and we had a really nice move right here. And look here, NVIDIA has closed minus 3.5% below the 20-day moving average. I think it's opening up potential for a further pullback. The entire 38.2% of this rally comes in around 147. Let me actually also bring 23.6, 160. So we'll be watching this 161, and then possibly around 147 as well, if the pullback is likely to continue lower. But closing below 20-day moving average, which is a lot of shorter term traders like to watch, I think it can open up the door. Okay, now let's also take a look at this on the weekly chart. There we go. On the weekly chart, what we can see is our targets were met, which is around 170 bucks. The market went about 14 bucks higher, and it's just gone sideways. It's pulling back, and we can see in this entire rally, this is kind of the well, not really. This was a bit of a pullback right here, and what we have got going is, yeah, maybe 165. So we should be watching this level in NVIDIA. The trend is strong, but looks like it is getting ready for a digestive period by the looks of it, and it's just gone nowhere. You can see that in the last 3 weeks since the beginning of August. It's just sideways actually. Now let's take a look at the stock of Meta. So Meta came very close to our target of 805, so 800 bucks roughly. I think the high was a 796.25, so pretty close. The week is not over yet, but if we get a week like this, it would have taken out the work of last 2 weeks. That's like 10 trading days. So that indicates further pullback perhaps, but this is the deepest pullback that we have seen. Well, not really the deepest pullback, but here we go. Yeah, 132. We should be watching this around here, and if we were to just have a Fibonacci retracement, what is this? Yeah, 130, 730 bucks roughly. Okay, but the biggest pullback we have seen in this one is actually this. So if we just take this point out here, so coming back to us 693, a lot of support from the structure right here. Getting below this, I think it's changing things, because this really important structural support from this double bottom formation around the 680 690 level, this will begin to come into the question. Okay, for Meta, let's take a look at Tesla. All right, so for Tesla, what we have is basically a sideways market, a trading range for a number of months now. A month and a half, you can see that in this triangle right here. The important low is right here. This is our point C around the 216 level, because we believe as long as this level is held, we are in ABCD higher to 530. But if it breaks below that, then the pattern formation is changing, and it becomes much more bearish. But this level is being held, is a key important level. And then if we just take a look at this on the daily chart, here we go. Trading range. This is our point C. This is when the news is really bearish. Is the largest single trading loss day in Tesla's history. It was more political around this one, but it was right at the 61.8% retracement as well. So now what it has done is basically it's just gone sideways, and as long as this 275 level is held, the chances are we are in this red ABCD to about 420 on the daily, and much higher on the weekly. This is what how I'm looking at Tesla. It's a pretty boring price action. Just keep on grinding, range bound. But the thing is that the stock hasn't really broken too much, given the kind of news it has gone through. Now let's take a look at Apple. Okay, so the Apple stock finally started to move around here. This is when Tim Cook went into the White House and basically made an announcement of a lot of investment in the US. But from a pattern perspective, this is what we had been watching, because this blue ABCD, so this low around 193 was really important. It has been held. So I think it's in that range for our target. 237 is our target, and it has been as high as 235, so missed by a couple of bucks. Wouldn't be surprised to pull back right into this 20-day moving average, maybe close this gap around here as well. This is where, if it just goes sideways, it will be actually quite positive for the stock. And the reason is that the moving averages will catch up to the 20-day shorter term with the 200-day, and 20-day moving average moving above the 200-day moving average would actually add to the positive momentum for the stock. So I think the stock is now in a trading range, so it's likely to move up and down quite a bit on the daily chart. On the weekly chart, This is really important that it never really closed below this trend line. It's just been on the 7th of April. There was a lot of pressure on the stock, but nothing really dramatic happened because it just closed above for the week, and it's just gone sideways, and looks like it's in this ABCD higher. So we could see maybe perhaps even $300 on the stock, but 275, then anywhere between 290 $300. The important is point C. So I think it's more for the investors at the moment, people who are with diamond hands, and they're holding the stock as it's just gone through a lot of sideways digestion right here. But it's good stock. Point C, 7th of April lows. That will change a lot of things, but it's not happening as of yet. I think we're in the CD leg higher in Apple. Now let's take a look at the Amazon stock. So Amazon seems to be coming in a bit of pressure. It has held this quite well right here, but this is one stock which likes to do double tops and double bottoms. So this is something we need to be really aware of. So let's see. In my books, this is double bottom as well when it retraced right into this 7th of April. Now where it is approaching after completing this big ABCD, it still remains a recovery right into this. So could it be a double bottom right here, and the stock then goes into a double top here, and then a double bottom right here, essentially a trading range affair. But the stock has done quite well. The momentum remains positive for the stock, so I think it's likely to remain a little bit boring trading range till it actually digests all of this, and then find its direction. But it's been a pretty good stock since 7th of April lows. Could it be a potential double top formation? There is no confirmation yet, but it's likely to remain range bound in this 211 to 230 kind of range. Okay, so let's also take a look at the Shopify. And the Shopify is actually some really positive news came out, I think, when the earnings came out. And we had that if 117 is getting above 117 is really positive for the stock, which it actually had done on the 14th of July. It went to 127. So this big surprise was, or essentially a surprise if you are a pattern recognition person. And now where it's gone is basically it's just extended right into 1.272. So I think it's just going to go through more digestion, pull back maybe to 38.2% retracement. Let's see. Okay. Okay, so I'm gonna actually remove this part because we don't really need this anymore. 124 maybe right into the structure. So yeah, I think that is a possibility. So what we're looking at Shopify. Now let's take a look at Microsoft. So the Microsoft is really interesting because I think it has also gone and completed this big ABCD. It was really hard to imagine this stock being, hitting 560, getting above to 560 level around the 7th of March lows. But this is where we were getting bullish right here because it had completed pretty much. This is market symmetry concept in the entire 2022 bear market. Lows, it had completed that, and then what it has also done is right into this zone of 38.2%, 50% retracements. There were a few other patterns completing on the daily chart, and then we had this bigger ABCD where the CD leg is 1.618 times the AB leg from the COVID lows. I think it's done. I think it looks like a major top to me. The way the market actually is when the earnings came out, it was just fantastic. The way it opened up, gapped up on the daily chart. Let me actually show you that on the daily chart. Here we go. I think I did a video about it as well. So it opened up with a massive gap and then sold off that day. It was only up 3.95%, by 1 point. With a massive gap up of about $30-$35, something like that, maybe $40. but now it has come and actually, just been selling, and it's below the 20-day moving average. It is also taken out the lows of 30th of July, so things are looking, maybe it wants to come back and test the 475, which is the 38.2% retracement of this entire move low from the 7th of April to these highs. So this is quite interesting actually. So what has happened in the Microsoft stock, but not surprising for those who are pattern recognition traders, investors, and they have been watching this channel, and also maybe perhaps on the Substack where we had this pattern laid out weeks and months in advance. This is what the beauty is of pattern recognition, how we work out these levels in advance in forecasting. We don't get everything right all the time, and usually it's my mistake because it means I've missed some cycle. But we do get a lot of tops and bottoms actually. So this long-time subscribers to the channel will know. All right, I think I've covered pretty much all the major stocks. The last one, Roblox. So the Roblox actually went and made new all-time high. I'm so happy that, so glad that this stock, we had been just watching this for a really, really, really long time. And we went through this entire 2022, 2023, 2024. This is a classic Vyckoff accumulation. And then it just broke out. It was real broke out, came back and test this level. So we had these nice ABCDs we were watching, and they were hitting our targets. Our target was this 38.2% retracement around 63 bucks, 63, 65. It was hit. I was really, really happy when that happened. And then on the daily chart, I'll just show you that on the daily chart. Then I had actually gone and drawn these lines live on the video that I was anticipating some correction to take place, but I wasn't sure whether it was going to be a simple corrective pattern or a complex one. And then I thought, okay, it's likely to be a little bit more complex one because we have these really simple ones right here. So borrowing the concept from the Elliott wave, the concept of alternation, and I just drew these lines and it turned out to be exactly like this, which is fantastic. Now look at the gap between the 200-day and 20-day moving average, and what has the stock done? It has come right into the 38.2% retracement. Guys, these levels work like magic in volatile markets in particular. They work in all markets, but when it is really, the markets are really, really volatile, and these numbers begin to get hit left, right, center. And I believe the reason is because there is so much volatility in the marketplace that what our eyes like to see or brains like to interpret these numbers, they are just hitting in time quickly, so the time gets shrunk. These levels are likely to be hit anyway, but it could take a couple of months, longer term years to hit. But when the market is really volatile on daily charts, this could get hit like, in a couple of weeks. Excuse me. So another really important one for you to watch. Excuse me. Last but not least, I'll just quickly go through. This is a report I publish on Substack, and today all the ARK ETFs, really bad day for them. But the real estate seems to be doing much better. So that's, I think, in the anticipation, and also home builders of lower interest rates. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.